planning to move to Porto on the D7 visa in mid-April next year. I have passive income from 12 rental properties in Florida and interest income from mortgages I make with real estate investors, also in Florida. So he has a real estate business of some sort in Florida. I won't have Social Security income until 2029. My questions are, first question, how will these sources of income, the rental, the interest, and eventually the Social Security benefits from the US, be taxed during the 10 years that he would hope to be subject to the NHR, the non-habitual residence? And then after the NHR program for him would expire after 10 years. So he has some other questions, but let's deal with this one first. And let's deal with the first part of it. So his rental property income, how would that be taxed here under the NHR? Augusto.
Well, rental property would be exempt of taxation in Portugal under the NHR regime. So the rental income under the double tax treaty would be taxable in the country where the property is located, or at least the US would have the rights to tax in such a way. It would be exempt under the NHR.
Okay, so we're not going to move on just yet because we put some flavor into this while we were discussing this before this Zoom call. So let's assume that this person has, it's 12 rental properties, right? And he has other investors. So we're going to assume that he has a structure, and we're going to assume that it's all in an LLC, a Florida LLC. So then, okay, same scenario, but it's in a Florida LLC. How is Portugal looking at that, Augusto?
Well, I would say that we have different ways to look at that. Because in case of an LLC, which is a transparent entity, so it's an entity that is not subject to taxation itself at the corporate level, the idea would be that any taxation of the activity, of the profits of the LLC, would be directly attributed to the partner, to the shareholder, for taxation purposes. That would be a way to look at this. In such case, the discussion around this would be if the nature of the profit that is allocated to the partner still has the nature of rental income, or if it is a business profit. And there is a lot of discussion around this. We may argue that the underlying income as the nature of rental income, and try to follow that route and argue that it would be an income exempt from taxation, given the nature of the underlying income. It's a possible approach. And a possible. I'm not saying that this would be the view of the tax authorities.
Yeah, so just to add to what Augusto has already said, it could be very, very nuanced, and especially so people, I know I've seen discussions and people have approached me and on our online forums on our website, and then they talk about invoking, I think it's Article 7 of the tax treaty, and it's business income, blah, blah, blah. But it really depends, because when you look under Article 7, that very first line, it speaks about having a permanent establishment here, in this case, in Portugal. So if it is that, I think a key factor, as whoever your tax advisors would be, a key factor for them to understand, which we don't know in this case, so we can't say one way or the other, but a key factor to consider is whether you have what we call substance or permanent establishment here in Portugal. So if it is that you are making decisions for that business from your home in Cascais or the Algarve or wherever it is you are, you're running that business from Portugal. So, then there's permanent establishment here, there's nexus here. So potentially that whole structure could be taxable in Portugal, potentially, right? So it really, really depends. Or if it is that you have a full team, boots on the ground in Florida, and all you're doing is you sitting back and you at the marina in Cascais and you're just having a good time and you're just receiving passive income, then that's another scenario, right? That is completely different from if you're actively involved. So this is something to consider. And we also get this as a slight segue. We also get this with some YouTubers as well. They may think, that your main audience, you're speaking in English on your YouTube channel and you're getting income, but that income is being derived from English-speaking audiences in the US. But the point is that you are running that enterprise from here in Portugal. So it really, it's something to consider, and you should really seek advice. And in that disclosure, really explain to your advisors exactly how your business is being structured. So, and just to get to the second part of his question, Augusto, he's asking, so what happens after the NHR expires? You want to comment on that?
Okay. After the 10-year period, what happens is that the general rules applicable to the regular taxpayers in Portugal will apply. And the general rules would be that the overall annual income subject to progressive tax rates up to 48% of personal income tax, and of course some passive income. For instance, we are talking about rental income in the example, would be taxed at a flat rate of 28% as an option.
Okay, great.
Please subscribe, like, share, and comment below. Our books and upcoming event are available at htj.tax. Email us at help@htj.tax to engage us, to advise on international tax or business matters.